You know what hurts worse than losing? Is when you're up, but then you continue to trade and then you give it all back to the market. See, I done been there before, but we're gonna talk about that today because that's basically untrained money versus trained money. And when you learn the difference, you become a much better trader. This is the Heavy Return Show, episode 5. Thank y'all for sticking with me for just a month. Now look, I'm really trying to get better as a conversationalist. I'm gonna continue to talk to y'all because I'm very, very passionate about what's going on. It's been a long journey. Well, maybe about a month, but either way, y'all know I drop episodes weekly. So y'all subscribe and tune in. And I'm gonna see y'all next week. All right, but anyway, so look, every trader knows this feeling. They were trading, they made some money, but then they kept trading and now they're down. See, normally this is not a trading problem. Y'all understand how to trade. We all understand support and resistance, trend lines, break and retest, confirmation candles. We all understand these things. We all understand these things because it's not a strategy problem. What it is, it's a discipline problem. And that's the difference between untrained money and trained money. See, untrained money is very, very undisciplined. Untrained money will cause you to revenge trade, overtrade. So we got to build the habits as traders in order to get better. We have to ingrain into ourselves the habits of a successful trader. Now, I don't know about y'all, but I don't know any traders that trade all day that are actually profitable. Most day traders that I know are only going to trade about once or twice in a day. And all the losing traders that I know, well, they're taking 10, 15 trades a day. Now, I know everybody's different, but from my experience, the less you trade, the more you actually make. That's kind of ironic, ain't it? Well, it's because the market's going to fluctuate. It's going to go up, it's going to go down, and it's going to get choppy sometimes. And market makers understand with these price fluctuations, they're going to get the retail traders out. You don't want to stay in these trades all day because eventually it's going to go against you. Problem is, you're not giving it back because you're dumb. You're not. You're actually a very intelligent person. You're giving it back because you believe that one good trade makes you invincible. And you can't do that. Just because you won that particular trade doesn't mean that the next one will follow suit. We have to shift our brains from chasing more and protecting our capital. Every time you get into a trade, do you understand that you're risking it? That you're risking it all, especially for y'all that don't like stop losses. Every time that you enter a trade, there's an opportunity that you can lose your money, all of it. And on the flip side, every time you put a stop loss in, well, you're capping your losses. Untrained money and trained money. See, trained money is never going to trade without a stop loss. And I'm looking dead at y'all. Make sure you use a stop loss. And for my people that say that mental stop losses are real, no, they're not. Because I've been there. When price is going against you, yeah, I know you don't want to get out the trade. Hell, I don't either. But you got to do that to protect your overall account. And what the math says is if you cut your losses early, but you let your winners run, you're going to come out ahead. And that's even if you're winning only about 50 to 60% of your trades. Why aren't we making our accounts bigger? And that's why. Because we are not cutting our losses in time. So before you get into a trade, make sure that you set a stop loss. That'll save you some heartache. So for my traders that are up in a trade, but then price starts to go against them, why don't y'all just get out? There's nothing wrong with getting out. Here's a tip. If you put a volume indicator on your screen whenever you're trading and you see that volume is starting to decrease and price is going against you, just go ahead and take your money off the table. Because when volume actually decreases, sometimes that signals a price reversal. And if price reverses against you, well, hell, you risk your money for no reason because you ain't take no money off the table. So always pay attention to a volume indicator. That's going to help y'all. That's for my people that don't like to take profit. So we're going to keep talking about untrained money, right? See, untrained money is overly confident. Untrained money is like, nah, the trade is going to reverse and I'll be fine. No, it ain't, y'all. Untrained money is that little voice in your head that says, hey, just take one trade. You can get it back. Untrained money is that little voice in your head that says, man, we really been killing it today. Let's see if we can keep going. Nah, don't do that. Or even worse, untrained money is the voice in your head that's saying, hey, we don't need no trading journal. I don't need to work on my habits. It's fine. I'll just keep it all up here. Then when you listen to that voice, your account goes in the negative. I'm telling y'all this because trust me, I have been that person and things only got better when I started to build habits, when I trained my mind, when I start listening to my trained money voice. See, my trained money voice is going to say, only take 2 trades a day. It doesn't matter if I win or if I lose. If I take 2 trades, I'm done. Doesn't matter. That's what my rules say. Anytime that I've traded outside of that, that's when I start taking my L's. So I gotta listen to that rule. Also, my train money voice says in my mind, go ahead and write it down. Write down the time you took those trades. Write down how much you made on that trade, how much you lost on that trade, when you entered, when you exit. What was the directional bias before you got into the trade? What were your thoughts while the trade was going on? So when you dissect that, I promise y'all are gonna get better. And I know y'all probably tired of me talking about the trading journal, but I really don't care. What I care about is making y'all more profitable. And the only way you're gonna become more profitable is if you listen to the trained money voice in your head. Stop listening to that untrained money, y'all. See, most traders don't blow accounts with just one mistake. They bleed it out through 5 bad decisions. Now stick with me because this is actually very important. So number 1, revenge trading after a loss. Now I get it. The market took your money and you need your get back. You trying to pull up and make sure you get your money back. They owe you, right? Nah, don't trade that day. Just go ahead and move on. Close your laptop, walk away. The market will always be there tomorrow. Like I legit had to turn my computer off every time I take a loss because I do understand that's a very painful pill to swallow. And the best way you could deal with it is you go and move on to something else. Don't even think about trading after that because revenge trading ain't gonna do nothing for you. You're not gonna wait on a setup. You're gonna be anxious and you're gonna skip all your rules and you're gonna oversize your account or you're gonna get in too early and you're not gonna look for good setups. That's the number 1 way for more of your money to be taken. See, how come we just can't be strategic whenever it's time to trade? You know the way that I kind of think about revenge trading? This is how I kind of think about it. And y'all may look at me like I'm weird, but that's fine. But look, now let's say that you went to a club and there was a group of people there and they jumped you. And I mean, they really, really gave it to you. They beat you up. You went to the hospital, whatever. Is it strategic to go back to go find these people the very next day? Or is it more strategic to take a step back, be patient, think about how you're going to react, and then make a move? I think the latter is probably the better move. Because if you rush into getting your get back with these people, they're probably going to whoop you again. I know that's a crazy example, but that's how my mind works sometimes, y'all. So y'all just got to forgive me. So every time you take an L, just think of it as the market jumped you and you need to wait to get your get back. All right, so number 2, turning a good day into a quota. Now, a lot of people always say, man, my goal is $1,000. My goal is $1,500. Well, I'll be happy with $100. The problem with that is you're actually trading for a number and you're not trading for a setup. The market's not going to give you the exact amount of money every single day. And when you're shooting for these targets, there's a chance that things may not go your way. So we can't be trading off of a quota. We have to trade off of a setup. Untrained money versus trained money. Untrained money is going to set a dollar goal. And if they don't hit that goal for that day, what's going to happen? More over trading or more oversizing. That's what a quota leads to. So y'all got to put the quotas to bed. Just trade the setup. I promise y'all, if y'all play this game long enough, the money will come. You just have to be patient and you just got to be disciplined. Number 3, train the chop because you don't want to stop. See, this may be more of a strategy thing because you really shouldn't be trading if the trend is not there. And if the market is choppy, just walk away. Because here's the thing, we've all read the candlestick Bible numerous times. So when you see a doji candle or when you see a bullish or a bearish engulfing pattern, you're all over it. You're like, oh, okay, boom, this is a reversal. I'm all over it. Nah, it doesn't work that way because there's other factors that goes into it. There's pivot levels, there's volume, and a number of other things that we can talk about later. See, the problem is y'all see one candlestick pattern and think that it applies. But what y'all are also forgetting is context. Because when you zoom out and go to a different time frame, what if the higher time frame is telling a whole different story? So y'all can't trade the chop. My best advice is zoom out, go to a higher time frame, get the bias from there, and ask yourself, where are we in the trend? Is it continuing? Is it a pullback? Or is it sideways? If you have the answers to that, especially on these higher time frames, then you'll be fine on the time frames that you use to enter. That's it. You see chop, you stop. Whenever it's choppy markets, just mark off the highs and lows and just wait for a break to either side. Then that's your opportunity. Until then, just walk away. So y'all say it with me. Stop when I see chop. Number 4, sizing up after the win. Now, this is the overconfidence mistake. You think just because you're on a 3-trade winning streak that you're invincible. Like the market won't chew you up and spit you out. And I've been there because we get into our own mind. We're like, yo, I'm really killing on the market. I got this. They can't get nothing past me. And then boom, you get humbled every single time. Like it's like being humble don't even come until you're overly confident. Like especially when I was beginning to trade, right? So when I first started trading, my very first trade, y'all, I kid y'all not, I think I made about anywhere from like 10 to 15,000 like in my first trade, and it was only off of something small, like maybe like $200-300. Now, back in them days, this is back in 2017, I was trading Bitcoin. Well, there's a saying that says everybody's a genius in a bull market. So I hit on my first trade. I'm like, yo, this is crazy. Like, so I hit on my first trade. I was like, man, I never made this much money in my life in one single day. Then I traded again, another hit, boom, another one. I think I might have made close to like $100,000 in 2017. I kid y'all not. This was like within like 24 hours off of, I forgot the exact amount of, but that doesn't matter. What matters is I thought that I was going to continue to win. So then what did I do? I sized up and then I got hit. That just makes me think about this radio commercial. See, I'm from Texas and there's this car commercial where these girls just got into a car accident and she's like, girl, you better call I just got hit.com. And the other one be like, okay. Like, that's what the market did to me. Like I went up. Like the $100,000, I killed them. And then boom, I got hit. So I'm telling y'all right now, that's gonna be y'all too. If y'all keep oversizing, you're gonna be saying that same tune. Like, I just got hit. I really believe that whenever you lose your money in the market, it's almost like a rite of passage. Like you just gotta go through it so that you can understand your threshold for pain, because it's very emotional. Like I don't believe you're a real trader unless you've taken a major L. Like if there's anybody out there that y'all listen to that's saying that they've never taken a major loss, go ahead and just walk away, because they're not keeping it real with you. Like the real traders, we done took some serious L's, but there's a lesson in the pain. And the lesson is we just need to be cool. Take our time and stop oversizing. Stop being overconfident. If the setup ain't there, don't trade it. That's it. I mean, it's very simple. There will be other setups. Do y'all understand that the market moves every single day? No, let me say it again. The market is going to move every single day, which means there's opportunities for you to trade if the setup is there. If you're watching this, the market is older than all of us, and it'll probably outlive all of us. It ain't going nowhere. So you ain't got to get it right now. Just get it tomorrow. Moral of the story, stop oversizing. All right, number 5, refusing to let the session end. For my options traders, the market is going to close at 3 o'clock if you live Central Time. If you live Eastern Time, that's 4 o'clock. Don't let that be when you stop trading. Now, I know y'all all heard this song. You got to know when to hold 'em. Know when to fold 'em. Know when to walk away. I don't know the rest of the words, and y'all don't judge my singing, but y'all got to think about this song. You got to know when to call it quits, and you got to know when to walk away. Just because the market is open doesn't mean that you should continue to trade. Whenever you continue to trade, you're putting your capital at risk. That is untrained money. Y'all got to stop listening to that voice, because trained money is going to get out that market when they've taken their 2 trades and they're going to walk away. They're going to fold them. That's what y'all need to start doing. Just because the market is open doesn't mean that you got to keep trading. And if you had that itch, then this is what you can do. You go on TradingView and then you hit replay and then you take pretend trades. Yeah, pretend trades. Just go ahead and pretend to trade. Because if you need to scratch that itch, then I'd rather y'all do it there with capital that y'all ain't going to lose in real life. But if you putting your real money on the line, you have to understand that the odds are actually against you. 90% of traders actually lose. It's only 10% of traders that are profitable. Which side do you want to be on? If you're the 10%, I can guarantee you, you are not a trader that's trading all day. You got to know when to fold them and you got to know when to walk away. When you take money out this market, go and enjoy it. You've earned it. Don't give it back. Untrained money and trained money differ on other things as well. I actually want to talk about the 3 components of every single trade. See, number 1 is the setup, number 2, the entry, and then number 3, the exit. See, the setup is probably the most important, because if the setup ain't there, what should you be doing? Not trading. Otherwise, you're just gambling, and you may actually have a better chance at the casino. So wait on the setup. Now, the entry has to be precise. Do y'all understand how important the entry is? Like, you can actually be right on where you think price is going, but if your entry is wrong, you could still take the L. Just wait for the market to move exactly where you want it or even a closed zone. But if it looks like you're putting yourself at a disadvantage if you enter at that point, then just wait for price to give you a better spot. See, y'all understand that price is going to fluctuate, so there may be an opportunity for you to get in at a better spot. But we have to be more precise about our entries because sometimes we could be either too early or even too late. If you have precise timing like Train Money, then you'll be just fine. Then finally, we have the exit. Remember what we talked about. You have a stop loss and you have a take profit. After you're already in your trade, assuming that your setup was correct, make sure that you put your stop loss and your take profit up. Those need to be in place. Matter of fact, I'll go as far as saying as those things need to be in place before you actually enter the trade. These things are there to protect you because you want to cut your losses early, but you want to maximize your winners. So the exit is just as important as the entry, and the entry is just as important as the setup. But when you have all three, then that's trained money. So look, the whole purpose of this episode was to get y'all from untrained money to trained money. I want y'all to start building those habits to become profitable. You have to decide which parameters work for you. You need to write those down and abide by those. Consider those to be laws or even commandments, and don't break them because those things are put in place to help you in your trading journey. Every time I broke a trading law, I took that L, and that was pain, but it's made me into the profitable trader that I am now because I understand why I had to put those rules in place. I'm hoping that y'all can listen to me and y'all ain't got to go through what I went through. Take my losses as y'all's lessons. You're going to lose some, but just make sure that you ain't losing them as big as I have. So when you get in the right habits, then you're going to make that money. That's the whole objective of the game. If you like making money, then that's just a change that you're going to have to make. Any profitable trader will tell you that. You can't shortcut your way to profits in this game. Y'all have to have a systematic approach to the way that you attack the market. You got to be militant. You got to have a trained mind when you're getting in and out. You have to be very, very strategic. Think of it almost like a chess game. This is chess, not checkers. This is your money on the line now. You done worked all them hours to turn around and give them folks your money in the market because you weren't listening to your habits. We already know you know how to trade. Just work on them habits, work on the discipline, and everything else will fall in line. That's the whole purpose of heavy returns. One discipline, but two scoreboards. Remember, it's all about consistency. One rep at a time. Take your time with it. Just keep back testing, test your strategy, practice, be in and out. But most important, follow your own trading rules and never break them because every time you break them, you're going to say, damn, I just got hit. I'll see y'all next week. I'm out. Peace.